Hello, and welcome back to another episode of HKEX Voice, our podcast series featuring insights from HKEX's executives and industry leaders on topics relevant to Hong Kong's financial markets. I'm your host, Jeffrey Young. HKEX has recently announced the launch of a new digital platform, Fini, to comprehensively streamline and digitalize Hong Kong's IPO settlement process. With Fini, the time gap between IPO pricing and trading would be significantly shortened, enhancing the efficiency of the IPO. Today, we are very pleased to have with us Lukas Petrikas, HKEX's Head of Innovation and Data Lab, to talk about Fini and why it matters. Lukas, thank you for joining us.
Good to be here, Jeffrey.
Well, this is a culmination of a few years of hard work, isn't it?
Yeah, the team is catching up on sleep right now, but we're not done yet.
Yes, certainly. For our listeners unfamiliar with Hong Kong and HKEX, Lukas, could you tell us a bit about Fini and its significance?
Yeah, sure. So Fini is an end-to-end reform of how IPOs come to market in Hong Kong. Specifically, we're talking about the last 2 weeks before the company rings the famous gong and the images are blasted all around the world. We call those last 2 weeks IPO settlement. Right now, that process is longer than it needs to be. It involves a huge number of different parties communicating with each other, perhaps more parties in Hong Kong than in any other market, and it's ripe for a refresh. So what we're doing with Fini is we're introducing a fairly simple shared platform that everyone from the smallest broker all the way up to the lead underwriters and to the securities regulators can use to automate workflows, share information in real time, and ultimately bring IPOs to market, to the gong, much faster. But speed isn't the only thing. While we're at it, we're also using this opportunity to address some of the other well-known pain points in the Hong Kong IPO market, such as overfunding, duplicate subscriptions, and this affinity for paper forms that a lot of people have.
So, Lukas, Hong Kong has a very unique or odd T+5 settlement cycle, like 5 days after pricing what companies list. Why is this unlike anywhere else in the world?
Good question. So there's a couple of things that are unique to Hong Kong, perhaps not unique globally, but certainly unique among the major IPO markets that are involved in doing an IPO here. The first one is, if you list a company here, you almost always have to offer shares to the Hong Kong public. And in a way, that reflects the fact that Hong Kong has a very financially engaged general public that is passionate about their stock market.
Yes, of course.
So for issuers, having a high demand in this public piece of your IPO can be a great momentum builder to get more orders or to get a higher price from other investors later, as well as to ensure that there's some liquidity after the listing. But it does also mean that up to a few million people are all potentially trying to apply for your shares at the same time. And that takes time to orchestrate and process. That's one reason why it takes so long. The other reason is that the Hong Kong listing regime requires companies to seek regulatory approval for the list of investors to whom they are allocating the shares. So beyond the general public, everyone else, like the big institutions. There are rules behind that, driven by considerations of market quality, transparency, and fairness. And that has to be done before the shares can start trading. So those are the two main reasons why Hong Kong has this somewhat unique T+5 structure at the moment between pricing and ringing the gong. They're not the only reasons, and there's always a good debate about them, and that was certainly part of our Fini journey.
So, Lukas, under the current processes and framework that we have with us, what is the shortest that we can achieve in terms of settlement pricing and process?
T+4 is the shortest at the moment, and you've seen that in recent years with some of the homecoming secondary listings, Alibaba, JD.com. They did start of trading 4 days after pricing the offering or closing the books. And they did that by taking out paper application forms and not printing their prospectus and putting it in bank branches, which most people were absolutely fine with. But to compress the timetable to shorter than that is actually impossible without making some more fundamental changes to infrastructure and to processes and so forth. For example, banking settlement cycles are still confined to business days and banking hours, whether we like it or not. So there are certain things that are harder to move, and that's why today T+4 is really the shortest we can do without doing a reform like Fini.
So, Lukas, how did we manage to go all the way down now to T+2 in the conclusions of the concept paper?
Well, it wasn't easy. The first thing we have to acknowledge is that the IPO market is woven into the fabric of the Hong Kong economy. Everybody knows about the IPOs. A lot of people are applying for them. Many people borrow money to apply for them. There are lots of jobs in the IPO market, legal, regulatory, operational, advisory. And this is, of course, as you know, an evergreen subject for the Hong Kong media. And rightly so. If you think about what has happened here in the past 30 years, almost every entrepreneurial success story to come out of Greater China, whether that's from the public sector or the private sector, at some point have stepped onto this red carpet and rung the famous gong in Hong Kong. And these companies have gone on to create millions of jobs with the money they've raised. They've created opportunities for tens of millions of investors to share and to be part of their success journey. So when we started talking to people about changing the process, often the first reaction we got is, it's working so well. Hong Kong is number one globally. Why would you want to change something that works so well? But after talking to a lot of people, and we spent more than 2 years discussing with the brokers, with the book runners, the registrars, the banks, the regulators, what could be better? How could we get this time down to reduce the market risk for everyone? And T+2 was an outcome of all of those discussions. It's a balance. It's a number that a huge majority of stakeholders felt comfortable with. Perhaps some make a bit more compromise than others in terms of having to change some of their practices or some of their systems. But overall, people saw that this is a good thing for Hong Kong, because if we go down to T+2, it will make our IPO market more competitive. It will ensure that we keep attracting those interesting companies, the IPOs of the future.
Lukas, we originally proposed in the concept paper to go all the way to T+1. What happened?
T+1 was a great target because it was simple and it was ambitious. Ultimately, we found that it was just too tight because of the unique regulations I mentioned earlier, but also because it left so little room for error or contingency. One additional consideration was that a lot of Hong Kong IPO roadshows actually end in the US. Traditionally, they go follow the sun. So they end up in New York or on the West Coast on the final day. And often the pricing decision is done late into the night and the company executives are there. So there was a real concern that if it's T+1, the company's executives will not actually have time to physically fly back to Hong Kong to ring the gong in their own listing ceremony, which sounds a bit funny now, but it's a real consideration because for many founders, this is the biggest moment of their professional lives, is listing their company. And they don't mind the extra day in order for them to physically be there for that. So I say it as an anecdote, and there were other reasons as T+2, but we really, turned every stone.
Well, that is very interesting. How then will Hong Kong's T+2 compare with other Asian and Western markets when it comes into effect?
When it comes into effect, T+2 in Hong Kong will be the fastest in Asia, and it will be on a par with major international markets like New York, London, or Frankfurt. Some of these other markets have T+1 IPO trading, what is known as conditional trading, whereby the shares start transacting on the stock exchange before the money has settled and the shares have been delivered into people's accounts. With Fini, what we will have is that settlement finality will happen on the first day of trading for most people. So in effect, if you look at the period of risk exposure, it's a similar outcome to the major markets of the world.
For investors then, what does this reform ultimately mean for them?
Well, initially, investors should not notice much difference. They will still apply for shares in the usual manner, whether it's through their broker or through a share registrar. What could well happen, though, is people will start to see their application money released back to them much faster than today when they don't get all the shares that they wanted, so they can reuse that money, perhaps for other IPOs. And that should also reduce the opportunity cost of participating in the Hong Kong market, in the IPO market for the average investor. Investors might also start to notice more structured data appearing around town, on screens, on billboards, on their phones, about the IPOs that are in the market, how subscribed they are, etc., in real time. Because as part of Fini, we will be providing a IPO reference data service, which doesn't really exist at the moment in Hong Kong. So people will see more information around them as well.
What we've been seeing a lot during periods when IPOs are very hot and very high demand, billions and billions of dollars will be held in the Hong Kong banking system and sometimes even push up the interbank lending rates. Can you tell us how this concept of a compressed funding model that you're proposing will help improve or change that when Fini is launched?
Well, you asked about my favorite subject. The idea has always been, Jeffrey, if you're a retail investor and you want shares in a Hong Kong IPO, you need to prove to the company that you can pay for them in full, that you're good for the money. So the company is not taking credit risk on millions of small investors, basically. That's the idea. Now, today, the way that that requirement is met is very simple and crude. Every investor puts all the cash up front with the issuer for their full application amount, no matter if it's their own money or if it's something they borrowed, a loan from their broker or their bank. That money is actually held physically in a nominee account with the company's name on it. And they refund you later for the portion that might not have been filled with shares in case the deal was oversubscribed. So if you don't get all the shares you wanted, the surplus money comes back and the company just keeps the part that pays for the shares you did get. The model I described today has zero credit risk, but it also has a lot of inefficiency. A single IPO in Hong Kong, as you know, can lock up to 6 months' worth of GDP.
Wow, 6 months.
For a whole week. And that starts affecting, as you said, money market, interest rates, and the real economy, because many things, including our mortgages, could be tied to Hong Kong dollar interest rates. Right. So with Fini, what we said is, do we really need all that cash, to be sitting with the issuer? If the investor can pay, and if there is someone backing their ability to pay, let's say someone has extended a standby credit facility to them or a loan that is contingent on the investor actually getting shares, so it's for the amount they need to pay, not for the full application, then making the investor cash everything out up front is a little bit over the top. So with Fini, what we're saying is we're introducing a compressed pre-funding option, whereby any participant of our securities clearinghouse, which operates that public subscription channel, they don't need to hold more cash in the bank for that deal any more than all their investors combined could possibly receive from the issuer. So for example, if it's a $1 billion deal, a $1 billion public allocation, the clearing participant would have to put up to $1 billion. So if you have $2 billion of subscriptions and $1 billion deal, you put up $1 billion in the bank, as opposed to 2 or 20 or hundreds sometimes if the deal is heavily oversubscribed. So it moves the credit risk between the subscriber and the lender. And that's a risk that banks are, by virtue of the business they're in a good position to manage. But it's no longer between the subscriber and the issuer. So in other words, we're using a centuries-old credit system to resolve a liquidity issue. And during market consultation, it's something that many people were very supportive of.
So Lukas, I think the launch of Fini will open a new chapter for HKEX and in our technology innovations. What is the future roadmap for the Fini infrastructure?
That's a great question. Fini will give us a good infrastructure that is connected to almost every financial institution in Hong Kong, plus probably over 100 law firms. It's a big user group. So we can use that, reuse that for a lot of things. For example, after IPOs, it's quite possible that we could use Fini to facilitate follow-on offerings, where companies that are already listed issue additional shares. It's actually a bigger market than the IPO market. Not in Hong Kong, not many people know that. Again, some of the process is quite similar. A little more simple than an IPO, fewer steps, but Fini could be useful for doing that as well. Maybe bond issuance, other kinds of financial instruments, maybe things that are unrelated to the primary market, like proxy voting. You've got the platform to do it. You've got the right people connected. It's a case of adding a few workflows and rules around it. So I would say any multi-party workflow that requires shared data and would benefit from real-time collaboration could well appear on the Fini roadmap for us.
I'm afraid that's all the time we have. Lukas, thank you so much for joining us today. It's been a pleasure to learn more about Fini and HKEX's initiatives to digitalize Hong Kong's IPO settlement process.
Thank you.
For all our new listeners, if you want to learn more about this podcast or Fini, please visit our website at hkex.com.hk. From all of us at HKEX Voice, thank you for listening and keep an ear out for our next episode. So long.